reopened. Masks are off. Offices are open. Everything's open. You can go into like a grocery store without your mask on. It's like it feels so weird, and everyone's kind of readjusting. And so we wanted to basically talk this Instagram Live about how that's affecting us at the Goldfinger Group and the real estate market in Los Angeles. We focus on buying apartment buildings in LA, and so obviously we have the inside scoop from what we're seeing with the rental market. So in terms of leasing, in terms of borrowing, so interest rates, the debt markets, capital markets, as well as the transactional market, so sales, who's buying, who's selling. And we wanted to give you guys an inside scoop into what we're seeing and what our plans are now that the Los Angeles city and the state and really the country just feels like we're alive and back at it.
It's awesome, and the weather's nice too. You can go to the beach. It's sunny,
yes.
Light breeze. It's perfect timing to be reopened, and we'll start with the easy one. I think a year ago, a lot of lenders basically just pulled out of the lending market, making it really tough to get financing. Interest rates were high. I remember Chase went from like 3.5% to like 5% on their loans just because of what was happening. So interest rates are low. They're slightly creeping up. I think the Fed said they're going to keep them steady for until 2022. They'll reevaluate where we're at, but lenders are out there. Deals are getting done with financing, which is awesome. We always take, we shouldn't say always, but we have debt on all our properties. We're very smart about our debt. We're very strategic based on who we're using and the type of project. So it's really helping us getting the deals done that we're buying, which is exciting, right?
Yeah, interestingly, like there's been more and more bridge lenders that we're hearing about, more and more like hard money bridge lenders, and that's
like aggressive financing, really.
Yeah, like higher loan amounts, and that's the competitiveness is great for us as borrowers because the lenders are somewhat competing to get the loans, to get the business, and they're dropping their rates and some of their fees as a result.
Yeah, totally, and that's what's happening right now in the deal we're buying in Venice. Is it's so competitive that we were able to negotiate and really get a great loan that we're excited about for this purchase. We can talk about transactions. Deals are trading. It's crazy. Like I was talking to one of our investors about our triplex in Venice, and he goes, "So where do you see an exit?" And I said, "Well, based on the comps of what I'm seeing, like over $1,000 a foot, over $1 million a door for like 2 to 4 units, I'm like, it's easily worth over $3 million. But if we really want to base it off our projections and how we see the market, like it's really in line with how we projected the investment going. So we'll see how that turns out. But in 2020, I think the transaction volume was like a third of 2019, which is crazy. It's crazy, but so much capital sat on the sidelines, and now we're seeing that money wanting to be deployed into assets again, which is probably driving up the pricing.
Yeah, I think there was basically 3 components over the last 6 months. There was the pre-vaccine. So this was like everyone was in that question mark phase of not knowing what's going to happen, how long COVID's going to drag out, and then there was the vaccine being announced, and then the vaccine being rolled out, so the vaccination phase, and then people started getting the vaccination, getting vaccinated, and as that happened, most of the smarter investors started saying, okay, well now there's a vaccine, naturally the market's going to reopen, and so people started buying, and there was probably a window of maybe a month, and then everyone said, oh, my cousin's getting back in the market, my friend, my competitor's getting them, and then now it just kind of feels like, well, the vaccine's out, city's wide open, masks are off, people are buying, people are selling, and deals are happening.
Yeah, it's exciting, and the one thing that I will say is, if you look at a cap rate perspective, cap rates have stayed pretty steady from 2019, 2020 into 2021, which is somewhat interesting. I think we saw initially a shock in the market if people were buying, middle of the pandemic, but pricing is back to where it was a year, 2 years ago.
On the sales side,
yeah,
but not yet on the rent side. We're still waiting for rents to come back to where they were pre-pandemic. LA's a big place, so there are certain markets that got hit harder than others. We've talked about in the past that the areas that have more of the essential workers, like the downtown, East LA markets, those were not impacted. They were not hit as much as the West Side markets, the markets where you have a lot of people who are either remote workers, roommate situations. So depending on the market, will definitely vary on how much the rents were hit, how much they dropped. And what we're seeing now is that things are creeping back probably around halfway back to where they were. So if you had a 20% drop, they're probably somewhere around 10% below where they were pre-pandemic. And that's what we've been seeing. If anyone has a difference in what they've been seeing in their portfolio, we'd love to hear what you guys have been seeing. But from our portfolio, we own throughout core of LA, downtown, Santa Monica, mid-city. We've been seeing that things are kind of like halfway or so back to where they were previously.
Yeah, and we're also seeing vacancy rates drop again, which is nice. It seems like people are moving back to the city. They want to be in LA. Right, the entertainment, the nightlife, it's all coming back. So people want to be in the action.
Nightlife, right?
Yeah, so much nightlife for me. But yeah, it's exciting, and I think we're leasing out 10 to 15 units right now on the west side, and we're getting a ton of applicants, we're getting a ton of prospective renters, and we're still going through that due diligence process. I think we're still being strict because the eviction moratorium is still in place. City of LA just extended it till September, so we're being strict on the renters that we're going to accept for our apartments. But we are seeing that people are coming back. People are looking for rentals, especially on the west side. I mean, it's summertime. People are ready to be at the beach.
That's right. And one other thing to note is that on the studio and 1-bedroom units, we've had a lot more applicants than we've had on the 3-4-bedroom units. I think part of that is because a lot of the families who are in the bigger units, they're still in the suburbs, they're still, maybe they bought a house, or, single-family home market is on fire, as you probably know. But a lot of the studios and the 1-bedroom units, those are what's getting the most applications, the most interest. Kind of the lower barrier of entry units are getting a lot of attention and a lot of applications, and the larger units are lagging a little bit behind.
Yeah, for sure. And I think for us, the leasing, the rents are the most important aspect because our building's only worth what the income is. So looking ahead, it's, well, where's the leasing market going, right? Is it going to rebound? Is there going to be such an influx of people back into LA? But also, where do people want to live, right? Are they still going to be working from home, so it doesn't really matter where they live? Or if your office is opening back up, do you want to be close to work, right? Do you want to be in downtown, or do you want to be in Santa Monica? And then on top of that, like, what are you looking for as a renter? Do we have to step our game up as an owner who's providing housing to supply the housing that people are looking for, right? In terms of amenities or finishes, renovations, right? These are all factors that we're considering right now as we're doing construction on, over 100 units.
Right, and the units where we do have those amenities, where we have those private yards, where we have the air conditioning and opening up the kitchens and doing a great job on styling the units, those are what speak to the rental market, and those units that are designed for the usability, the functionality, and to be in line with the style of today. Those are the units that are getting the applications. It's really hard to just paint a unit and expect people to just move in. People want style, they want quality, they want functionality, they want sustainability, and that's what we're doing our best to provide those things plus the amenities for the tenant base.
Couldn't agree more. That's it for me on the state of the market.
I mean, the other thing I want to say is that we're net buyers. Some people call and say, hey, you guys selling anything? And I say, at the right price, we'll sell anything. But really, we're net buyers today. We're still looking to buy. We're buying five buildings right now. We have 2 exchanges. We sold a building a few weeks ago in Santa Monica. We're closing on another sale, another disposition tomorrow in Echo Park, and we're in the market to buy. Again, everything's for sale at the right price. Almost everything, not everything. Almost everything's for sale at the right price. But we're net buyers, and some people may be asking, well, there's so much. LA has so many issues. You got the homelessness. Rents are still down. We had an earthquake yesterday. I didn't even know it. I came out of the
Knocked out like a
elevator.
baby.
Someone's like, "Oh, did you feel the earthquake?" I was like, "No, I did not feel it." But apparently, everyone else felt an earthquake yesterday.
Well, I guess not the two of us.
I guess not the two of us. We're that strong. We didn't feel it, but we still find that LA is a good, strong, long-term place to own real estate. Does it have its issues? Yes. Do we have things that we wish we could change governmentally? And are there definitely way too many homeless people out there? Is it really hard to build? Yes. Is it really expensive to find? Is it really hard to find labor? Have material costs gone up? Yes. However, that being said, when we underwrite to today's market, and we buy and we proceed optimistically but also cautiously, and we're still buying again because of the long-term prospects of what we believe LA will be and will continue to be for years to come. So that being said, if anyone has any deals, please reach out at the Goldfinger Group, or you can email Maxx on Instagram. You could DM me at Elijah Kropp, and we would love to hear from you. And thank you for watching. It's been a pleasure.